Hi guys, welcome to beginner session of our training program. I'm glad to be your host, Joseph Igoche. On this session, we'll be dealing with a lot of objectives, one of which is the background and history of Forex trading and then basic Forex terminologies and the likes of them. But for now, let's start with the background and history of Forex trading. Forex trading, which has its acronym as Forex, is the act of exchanging currency. It's thought to be centuries old, dating back to Babylon period. Today, the Forex market is one of the biggest, most liquid, and accessible markets in the world. It has been shaped by several important global events like Bretton Woods and gold standard. It is important for Forex traders to understand the history of Forex trading and the key historic events which have shaped the market. This is because similar events could likely occur again in different but similar forms. Meanwhile, money has evolved over time through different systems, including the following. We have barter system, coin system, gold standard era, paper currency, and cryptocurrency. One of the systems that money has evolved over time is the barter system. The barter system is the oldest method of exchange and began in 6000 BC. Introduced by Mesopotamia tribes, bartering is a direct trade of goods and services. For example, a trader may exchange a bushel of wheat for a pair of shoes from a shoemaker. Under the barter system, goods were exchanged for other goods. The system then evolved and goods like salt and spice became popular mediums of exchange. Ships will sail to barter for these goods in the first ever form of foreign exchange. The next of the list is coin system. The coin system started sometime around 77 BC. The Chinese moved from using actual usable objects such as tools and weapons as a medium of exchange to using replicas of this same object that had been cast into bronze or spherical shapes. This object became one of the first coins that are used as means of transactions. After that, we had the gold standard era. In this era, gold coins became widely accepted as medium of exchange, but they were impracticable because they were heavy. In the 18th centuries, they adopted the gold standard as a means of payment. The gold standard guaranteed that the government would redeem any amount of paper for its value in gold. Now we had the paper currency. Now the paper currency around 700 BC was invented by the Chinese again. This time around, the Chinese moved from coins to paper money, and then parts of the European zone took over by using metal coins as their sole form of currency all the way up to 16th century. However, banks eventually started using paper banknotes for deposit and borrowers to carry around in place of metal coins. These notes could be taken to bank at any time and exchanged for their face value in metal, usually silver or gold coins. This paper money could be used to buy goods and services. And in a recent time, cryptocurrency came up. Cryptocurrency is a virtual money, and it came as one of the means of transaction in terms of reducing what's called the transaction fee on performing various modes of payments. Bitcoin was released in 2009 by the pseudonymous Satoshi Nakamoto, which quickly became the standard for virtual currency. Virtual currencies have no physical coinage. The appeal of virtual currency is that it offers the promise of lower transaction fees than traditional online payment method. The virtual currency are operated by a decentralized authority, unlike government-issued currency. Today, the Forex market is the largest market in the world, with more than 6.6 trillion being traded on the Forex market daily. The future of Forex market is ever changing positively, leading to lasting opportunities for all Forex traders. With every currency evolution or money evolution, there has always been a side effect. All money that were used in human history had one side effect and they were left for another. That's not to say that those currencies that are left are no longer in use, but they are not popularly known or exhibiting the character of the money, which is homogeneous. The next on our course is to identify the basic terminologies in Forex trading. But before we continue that, I'd like to take a pause here while we continue on the next slide. Cheers. Keep it simple, keep it principled, and keep it profitable.